and 50. I'm starting to deep dive these two indicators, the percentage of stock in an index above the 200-day moving average, NDTH. So this for the Nasdaq 200, and the quantity, the percentage of stocks above their 50 FI 50-day moving average. Trying to get some, trying to observe some correlation, what happens, the behavior, and use that to try to reproduce or try to add that to my toolbox of weight of evidence. Remember, I look at clues. Stan use the 30-week moving average, price action below horizontal breakdown line, double the volume on the breakdown or breakout. Add economic data to that. Where are we in the economic cycle? Is unemployment at all-time lows? Usually that's right before a recession. And the more tools you have when you do the weight of evidence, the better armed you are to know exactly where you are in the cycle. And all the elements, they click together, you'll avoid whipsaws. And that's the goal, right? The goal is capital preservation. And to be able to preserve capital, the best way is to avoid whipsaws, avoid jumping in too early, avoid then you get in, it looks like a breakout to the moon, and then wait, what? Why did I get triggered out? And then, yeah, true. We're 10 years in the bull cycle, and if I would have looked at the economic data, I could have seen that the yields were inverted and unemployment was starting to creep up, etc. So to avoid all that, you have to add stuff to your arsenal, guys. So let's start with the Nasdaq 2000. Unfortunately, I don't have it before 2007, but it's good enough. So I'm going to look at a high. I'm starting to look at especially the 200, quantity of stocks above their 200-day moving average. And right here, I'm going to put a high right here. So that's one of the highs. What was happening to the 50-day, the percent of stocks above their 50-day moving average? Well, there's always going to be more, right, above their 50-day than their 200-day. So when the 200-day is at, well, not always, right? Not always. Depends, I guess, if you're on the way up or on the way down. So on the way up, I had 200 right here. I had 80% above their 200-day moving average, and the 50, I had 86. And where was the price action on the chart? Right here. Whoa. Okay, zoom in. Scoot. So you see, these metrics were so high, but the price action, after that, it kept going up. But wait, less and less stocks were going above their 50-day moving average. Less and less stocks were going above their 200. It was actually declining, starting to create some divergence. What does that mean? Is it that people are starting to remove stocks from more risky ventures, IPOs, and start moving into, let's say, Apple and all the blue chips? That's one of Stan's tenets. He said towards the end of bull markets, you'd see less and less stocks making new highs, but the price action of the market would still be going up because the money was actually being moved from higher risk stocks to lower risk stocks. So that also gives you a point of view of sentiment, how people are viewing risk, how about the environment, how it's changing. Okay. So what happens after that? Okay, I'm gonna need to zoom out more. I tried drawing trend lines, guys, on the 200-day moving average, the quantity of stocks above the 200-day moving average. Could not make a new high right here. Could not make a new high. So let's move that right there. Can't make a new high. The The 50-day can't make a new high, still going down. But I see the 50-day more as is going to be a more rapid oscillator, right? Goes down, it's going to start hitting a faster 50-day, giving you fuel, like when you're in oversold territory for next leg up. But the 200-day, I see it like my fast stock on my monthly chart. It doesn't move as fast, but you want to notice the trend of it. If the trend is really trending towards one of the zones, then you know that overall you're heading into a really stage 4 or bearish type scenario. And what's happening to the price action? Lower highs. So right now, the 200-day starting to make lower highs right here compared to this one right here. 50-day, well, yeah, less precision right there, more of an oscillator. Probably going to use that later on if you'd want to catch these waves as you go down. It's the price action of that. Whoa. When you start hitting those lows, you start to make divergence with the price action. Price action keeps going lower, but the 50-day is not making lower highs, lower lows, and now it's making higher lows. Then you have divergence, you have that gas tank and pushing back up. So I could make an analogy that the 50-day, above 50-day, is more like the fast stock on the weekly, giving you fuel for the next run up. And again, yeah, the 200-day is more like my fast stock on the monthly chart. Slower, but you're going to use it to know if you're really in a heading for a disaster or if you're getting out of a disaster. All right, let's go to the next peak. Whoa. Whoa. Too many highlighted, Pat. Scoot that just a little bit. Just a little bit like that. What? Okay. Patrick. You're wasting my time. Okay, like that. Next high. Even the 50-day can't make new highs. Price action can't make new highs. Starting to get into downtrend. So now you see you don't have any divergence with there's no divergence with the 50-day, the shorter time frame. And there's no divergence, bullish divergence with, it's mostly this one, I think that's important. On the 50, no divergence there. Higher lows. Everything, there's no signals, abnormal signals here, except that you're starting to keep trending lower and lower highs. And then downfall. So already the trending downwards 200-day was a sign combined with the lower highs. And then after that, you'd have your monthly defined breakdown line. You'd have your weekly defined breakdown line. You'd be below the Chill cloud. So you add all that to your weight of evidence, and it'd be hard to say it's going up to the moon. So right here you say, I'm going to go back up. But if you see the 200-day, you can't make new highs, and the 200-day can't break its trend line. That should give you good food for thought that there's not enough juice left in here. Let's wait. And then the price action went down, flatlined that 200-day for a while. But after that, when the 200-day moving average started going back upwards and crosses right here, crosses the wait a few copies, crosses above that trend line, goes up, retests it. Patrick, what's wrong? Right here, 50-day moving average, quantity above that move going up. Okay. And then price action above, zoom in. You have a nice base, horizontal breakout line above Ichimoku cloud, above your 50-day moving average, very close to going over the 200-day. The weight of evidence is starting to pile up that, yeah, this is going to start looking like the end of that bear market, of that stage 4, or the start. You're out of that stage 1 base, and you're going to start a stage 2, especially after the retest of the 200-day. So the 200-day, quantity above the 200-day moving average, really, you got to respect that. Here you're in the power zone. It stays above. Oh, I'm going to short. No, don't see it like that. See it as if there's a trend line violation, if suddenly you start having trouble staying above, then you might be hitting some turbulence. You might be slowing down. And you see right here. Oh, move that. It broke down, did a retest. Oh. The 50-day, my faster moving indicator. And right here. So right there, let me zoom in. Right before we had, and you don't want to stick around, how long is that? April 2010, all the way before it went back up to that price. You had to wait to October. So 5-6 months. This would made you save all that time. Broke below, something's wrong. Retest, no. And after that, sideways move for a while. Stay on the sideline, guys. And until you see again, when you start having divergence with the 50-day, the quantity above their 50-day moving average, and the price action, you're starting to gain some strength. Consuming it on the way up. One last dip. I see. Is that more divergence? No. No divergence here. And off it goes, back into a power zone, going back up. One, two, three, four. Even here, starting to get some out trendline violation. And if you wanted a horizontal trendline violation right here of the 200-day a little later on, you're out of that base of the percentage of stocks above the 200. So that trend of having stocks really bearing down on you, you're out of it. Diagonal, horizontal, retest, and off you go into the power zone, guys. And you're staying in the power zone, dropping off. Same thing here. If you're starting to get some violations, test, break, retest, failed, and after that was not able, you even did some divergence with the price action on the 200-day versus the 200-day. And after that, that could have been a good warning sign. Hey, just like we had before, if you have divergence with even having with the 50, that's people removing their money from those stocks, those riskier stocks. Something's up, putting into those blue chips, lowering the quantity of stocks that are staying above, but all that quantity of stocks that are not, that money's getting sapped out of, their moving averages, their price action is going down. They're below their moving averages, the 50, the 200, and that brings down the total price of the index that they're in. And you could have avoided all that. So look at that. When you have synergy, horizontal break from the for the 200-day, when you have bearish divergence for tops, high, lower high on both 50 and 200, something's brewing, a drop's brewing. Consider it in your weight of evidence. And here again, on the way back up, same thing. Trend line, break, you're back above, back into the power zone. That's what you want to see in an uptrend. You want to see constantly stocks above their 50-day, stocks constantly above their 200. And when you start getting divergence with the price action, you're entering in turbulent territory, guys. So that brings me all the way to today. I want to go see today. Whoa, fast zoom. So where are we today? 200 day. Ooh. So on the 200 day, we're actually going up above. Is that too far away? Yeah, let's keep it short. We're actually getting above the 200 day, guys. Really, really close. If we're going to go back down, this could be actually giving you a sign that you're exiting in the weight of evidence. If we go above the 200 day moving average, the quantity of stocks above their 200 day moving average is starting to creep up. On the 50 day, we're starting to get divergence go, though. Right here. Lower highs on the price action, higher highs on the indicator. So this could be a signal that if this gets consumed, bring the price action back down, and this might make the 200 day moving average start turning back down right there. But I want to see, you see we had it here. Is that higher highs? High 77.01. Yeah, barely. So we still had it here. Higher highs, price action. 50 day could not make a higher high. The 200 day could not make a higher high. And we actually had it for a while, guys. If I extend that. Oh! Lower highs, lower highs, lower highs for a long time. So I think the longer it lasts, the stronger when you consume. It goes down. 50 day moving average keeps going down. The quantity above. The 200 day, same thing. Quantity keeps going above. Right here. Starting here. Divergence. Divergence. Divergence right here. Going down. So right now, this is really, really, really critical moment. And it adds up with other indicators that we're closing in on 200 day moving average. It's starting to flatten out. Really critical area. So if that 200 day moving average, the quantity above, starts going above these trend lines, above these horizontal trend lines, and we don't consume this 50 day, the above 50 day right now to start bring the price action back down, then this could actually turn up and we could have another leg up, keep going up higher. So always take with the total weight of evidence. I'm exploring this, the use of these indicators, but I'm going to keep an eye on it and build off your base. Do back testing, historical testing, do the Nasdaq, do the Russell, do the TSX, do European stocks, anything, any other indexes, and try to build off that. I'm definitely going to keep looking at these indicators, and it's going to give me an idea, I think, of the sentiment of the risk, what if people are risk on or risk off, guys. Price action, it hides everything, keeps going up, but if you see these metrics start going down, somebody's in the know, and the assets, the money's moving from riskier stocks to blue chips. All right, guys. Whew, long one. I'll let you go with that. Keep an eye on all that, and see you later.